Hello friends, if you are 62 or older, own a home, and have ever thought about using a reverse mortgage, there is one question you need to ask before you sign anything. Not after the closing. Not after the first payment arrives. Not after a spouse gets sick or passes away, before you sign. The question is simple: what happens to my spouse if I am the borrower, but my spouse is not on the loan? That one detail can change everything. It can affect who gets money from the loan, who has obligations under the loan, whether someone can remain in the home later, and whether the family is caught off guard when the loan becomes due. Now, let me say something clearly at the beginning. This is not a video saying every reverse mortgage is bad. For some older homeowners, a reverse mortgage, especially a home equity conversion mortgage, or HECM, can be a serious option to discuss. It may help some people use part of their home equity while continuing to live in the home, but it is also a major financial decision. And with major financial decisions, this danger is not always the loan itself. The danger is signing without understanding the spouse rule, the property tax rule, the insurance rule, and the rule about the home being your principal residence. So today I want to walk through 5 questions every homeowner over 62 should ask before signing a reverse mortgage. These are not trick questions. These are the kinds of plain English questions you should bring to the lender, the loan servicer, a HUD-approved reverse mortgage counselor, and, if needed, a qualified legal or financial professional. Now let's start with the foundation. A reverse mortgage is a special type of home loan for homeowners age 62 or older. The most common kind is called a HECM, which stands for Home Equity Conversion Mortgage. With a regular mortgage, you usually make payments and the amount you owe goes down over time. With a reverse mortgage, the amount owed generally goes up over time because interest and fees are added to the loan balance. That does not automatically make it wrong, but it does mean the family needs to understand that the home equity is being used. The money is not a gift, it is a loan. And the loan usually has to be repaid when certain events happen, such as when the borrower sells the home, no longer lives in the home as the principal residence, or dies. That is where many families get surprised. Question number 1. Is my spouse a co-borrower or only a non-borrowing spouse? Write that down exactly. Do not just ask, will my spouse be okay? Do not just ask, can my spouse stay in the house? Ask this exact question. Is my spouse listed as a co-borrower on the reverse mortgage, or is my spouse listed as a non-borrowing spouse? Those are not the same thing. If your spouse is a co-borrower, that usually means both of you are borrowers on the loan. Both of you are part of the loan. Both of you are responsible for meeting the loan obligations. If one borrower dies, the other co-borrower may be able to remain in the home and continue under the loan, as long as the loan requirements are still met. But if your spouse is not a co-borrower, the situation is more complicated. A non-borrowing spouse may be able to stay in the home in some HCM situations, but that depends on the details. It can depend on when the loan was taken out, whether the spouse qualifies under HUD's rules as an eligible non-borrowing spouse, whether the spouse was properly identified in the loan documents, whether the spouse lived in the home, and whether the spouse continues to meet the required conditions. That is why you do not want a vague answer. You want the status in writing. Before signing, ask the lender or counselor, please show me where my spouse's name appears in the documents and explain whether my spouse is a borrower, a co-borrower, an eligible non-borrowing spouse, or something else. And if you already have a reverse mortgage, call your loan servicer and ask what names are listed on the loan records. Ask them to send the information in writing for your records. Before we continue, if you are not subscribed yet, hit subscribe and turn on the bell. Rules around retirement, housing, Social Security, Medicare, taxes, and senior financial protection can be confusing, and most people are never personally walked through the details. I break these issues down in plain English so you can ask better questions before a costly mistake happens. Question number 2. If I die, move out, or enter a nursing home, when does the loan become due? This is one of the most important parts of a reverse mortgage. Many people hear no monthly mortgage payment and assume that means there is no serious repayment issue, but the loan can become due and payable after certain events. The most common examples are when the last borrower dies, sells the home, or no longer lives in the home as the principal residence. There is also an important issue if the borrower has to move into a healthcare facility, such as a nursing home, assisted living facility, hospital, or rehabilitation center. If the borrower is away from the home for more than 12 consecutive months because of a healthcare situation, that can trigger repayment issues unless a co-borrower or eligible non-borrowing spouse situation applies. Let me put that in plain English. Suppose a husband signs the reverse mortgage as the only borrower, and his wife is not a co-borrower. Years later, the husband has to move into a nursing home and is away from the home for more than 12 consecutive months. The wife may assume she can simply continue living in the home. But if she is not a co-borrower, her right to stay may depend on whether she qualifies under HUD's eligible non-borrowing spouse rules and whether all loan obligations are still being met. That is not something you want to discover during a medical crisis. So before signing, ask, what specific events make this loan due and payable? Then ask, what happens if I die first? Then ask, what happens if I move to a nursing home or assisted living for more than 12 months? And then ask the most important spouse question, what exact conditions must my spouse meet to remain in the home if my spouse is not a co-borrower? Do not accept a general answer like, your spouse should be fine. You want the conditions, the paperwork, the timeline, and the responsibilities explained clearly. Question number 3. Who must pay the property taxes, homeowners insurance, HOA fees, and other property charges? This is where a lot of seniors get into trouble. A reverse mortgage does not mean you stop being responsible for the house. In many cases, you still must keep property taxes current. You still must keep required homeowners insurance current. If there are homeowner association dues, condominium fees, flood insurance, or other property charges, those may also matter. You must also keep the home in good repair and continue meeting the loan terms. This is not a small detail. It can be the difference between staying safely in the home and getting a default or foreclosure warning later. Some homeowners think, if I do not have to make a monthly mortgage payment, I am done paying for the house. That is not how this works. You may not be making the same monthly principal and interest payment you had with a regular mortgage, but the ongoing obligations do not disappear. Taxes, insurance, property charges, and home maintenance still matter. Here is the question to ask before signing. Please list every ongoing cost I am still responsible for after the reverse mortgage closes. Then ask, what happens if property taxes are late? Ask, what happens if homeowners insurance is canceled or not paid? Ask, what if my HOA dues or condo fees fall behind? Ask, does the loan include any set-aside or arrangement to help pay property charges? And if so, what exactly does that cover and what does it not cover? And if you are already struggling to pay taxes or insurance now, do not hide that from the counselor. That is one of the most important things to discuss. A reverse mortgage may provide cash, but if the ongoing home costs are still unaffordable, the risk does not vanish. It may simply show up later as a tax, insurance, or property charge problem. Question number 4. Will my spouse receive loan payments after I die? This is another point many families misunderstand. If a spouse is not a borrower on the reverse mortgage, that spouse may not receive money from the reverse mortgage after the borrower dies. Even if an eligible non-borrowing spouse can remain in the home under certain conditions, that does not mean the spouse continues receiving payments from the loan. That distinction matters. Imagine a household where the reverse mortgage money became part of the monthly budget. Maybe it helped with groceries. Maybe it helped with utilities. Maybe it helped with property taxes, insurance, medications, or repairs. If the borrowing spouse dies, the surviving non-borrowing spouse may suddenly face 2 problems at the same time: a change in household income and confusion about the reverse mortgage rules. That can be a very difficult situation. So before signings, ask, if I die first, will my spouse receive any more money from this loan? Then ask, if no more money is available, what expenses will my spouse still have to pay to remain in the home? Then ask, what documents will my spouse need to provide after my death or after I move out? And ask, how quickly must my spouse or heirs contact the servicer? These questions are not meant to scare you. They are meant to prevent confusion when the family is already under stress. Question number 5. Have my heirs and family been told what happens to the house? A reverse mortgage can affect what your heirs do after you pass away. If the loan becomes due and payable, heirs may have options, but they usually have to act. They may need to repay the loan balance, sell the home, refinance, or take another permitted step under the loan rules. For HECM loans, there are rules about how heirs can satisfy the debt, including situations where the loan balance is more than the home is worth. But the key point is this: your children or heirs should not be hearing about the reverse mortgage for the first time after you die. That is how family conflict starts. One child thinks the house is free and clear. Another child assumes the bank automatically owns it. A surviving spouse thinks everything is protected. An adult child ignores a due and payable notice because they do not understand it. These mistakes can create pressure, missed deadlines, and unnecessary fear. Before signing, ask the counselor, what should my spouse and heirs know now? Ask, if the loan becomes due, what notices will be sent, who receives them, and how much time does the family usually have to respond? Ask, can the heirs keep the home, sell the home, or turn the home over to satisfy the debt, and what does each option require? Then have a family conversation while everyone is calm. You do not have to share every private financial detail with every relative, but the people who may be responsible later should know that the loan exists, where the documents are kept, who the servicer is, and what to do if a notice arrives. Now let's talk about what this video does not mean. This does not mean a reverse mortgage is always a bad idea. This does not mean every non-borrowing spouse will be forced out. This does not mean the bank automatically takes the house the moment someone dies. And this does not mean every homeowner should avoid a HECM. What it does mean is that you should not sign based only on a television ad, a postcard, a friendly sales pitch, or the phrase, no monthly mortgage payment. You need to understand the conditions. You need to understand who is protected. You need to understand who is not protected. And you need to know what can make the loan due. So instead of asking only, how much money can I get? Slow the conversation down and ask the spouse and home questions first. Now I want to give you a short script you can use when talking to a lender or counselor. You can say, I am considering a reverse mortgage. I need to understand how this affects my spouse. Please tell me whether my spouse will be a co-borrower or a non-borrowing spouse. Please show me where that appears in the documents. Please explain what happens if I die, sell the home, move out, or enter a healthcare facility for more than 12 months. Please list every tax, insurance, HOA, maintenance, and property charge obligation that remains after closing. And please explain what my spouse and heirs would need to do if the loan becomes due. That may sound like a lot, but it is much better to ask these questions at the kitchen table than to have your family trying to figure them out during a crisis. And here is another important step. Before you make a final decision, talk to a HUD-approved HECM counselor. HUD provides ways to find reverse mortgage counselors, and HECM counseling is a key part of the process. A counselor can help explain the costs, alternatives, obligations, and risks in a way that is separate from a sales conversation. If you feel pressured to sign quickly, slow down. If someone says, do not worry about the spouse details, slow down. If someone makes it sound like property taxes, insurance, and HOA fees no longer matter, slow down. If someone promises that your heirs will never have a problem, slow down. And if the explanation changes depending on who you talk to, get the answer in writing before you move forward. Here's the full 5-part checklist to remember. First, ask the spouse status question. Is your spouse a co-borrower, an eligible non-borrowing spouse, a non-borrowing spouse who may not qualify, or not listed in the way you assumed? Get the answer in writing. Second, ask the due and payable question. What exact events make the loan due, including death, selling the home, moving out, or being away in a healthcare facility for more than 12 consecutive months? Third, ask the property obligation question. What must still be paid after closing, including property taxes, homeowner's insurance, flood insurance if required, HOA or condo fees, repairs, and maintenance? Fourth, ask the spouse payment question. If the borrower dies first, will the surviving spouse receive any more loan payments? And what expenses will that spouse still have to cover to remain in the home? Fifth, ask the family and heirs question. What notices will be sent if the loan becomes due? Who must respond? What options may be available? And where should the documents be kept? And across all 5 questions, remember the same final rule. Meet with a HUD-approved counselor before signing and consider qualified legal, tax, or financial help if your situation is complicated. The big lesson is this. A reverse mortgage may be a useful tool for some homeowners, but it is not a simple free money product. It is a loan tied to your home. It can affect your spouse. It can affect your heirs, and it comes with ongoing responsibilities. So if you are 62 or older, and someone in your family is thinking about a reverse mortgage, do not start with the question, how much money can I get? Start with the question, what happens to my spouse, my home, and my family if life changes? That is the question that can save a family from a painful surprise. Subscribe for more plain English senior financial alerts, and share this with a homeowner, spouse, adult child, or caregiver who may be discussing a reverse mortgage right now. One conversation before signing can prevent a lot of confusion later.